Hi, this is Brent with another chart breakdown video for Trade Therapy. It is Monday morning, May 5th. It is almost 11 o'clock a.m. I hope everybody had a good weekend. Hope everybody had or got a lot out of last week's Clarity Spotlight on NVIDIA. We're going to try to get to the bottom of it. NVIDIA just gave the retail investment community the miracle bounce that it had been praying for. We're going to try to uncover whether or not this is the start of something bigger or if this is just the latest illusion that Wall Street is serving up. Is this just another false breakdown or false breakout, I'm sorry, that we've been seeing across the sector for quite some time now? We're going to get started by taking a look at some of the supporting evidence, some of the top-down evidence that we gathered this week. This is SMH. This is VanEck Semiconductor ETF. Back in August of last year, we spotlighted SMCI, and we had been talking about in June and July, we've been talking about the likelihood of Wall Street taking profit in this area, in this range. We did not know the yen carry trade was coming, but that's how Wall Street took advantage of the situation to take profits. And when we see a breakdown like this, we recognize that this is the first wave of a corrective wave structure that is forming. We do expect to see a back end to this yen carry trade. So this A wave, I'm sorry, is going to produce a C wave. And so that's what we were looking for. We had taken our best shot at a top for this B wave. We had expected to see 265 to 270 be the top that we were looking for. And some of you that have been following our content closely know that we actually did take a short position here. We were looking for the follow through on the C wave. We thought this would be the B wave here, and we'd see a C wave develop. And it just didn't happen for us, so we stopped out of our short position. But you'll see that SMH did go on and come up and hit our target. Believe this topped out at 268 before dropping into this back end. So here's your back end to the yen carry trade. Here's your C wave, which of course we've all been watching over the past few weeks. And we see massive volume coming in at the bottom, right at the 200-week exponential moving average, which pretty much confirms or validates that this is reaccumulation occurring, that Wall Street did take profit here and they have reacquired their position. Some additional supporting evidence that we had been tracking and we had been watching, we had written about this short position or downward pressure being applied to the semiconductor space for quite some time. Success gave us a tip or gave us a tell back in October of 2024. This was our follow-up to SMCI in November. We had talked about how there was tremendous downside pressure being placed on the semiconductor space. We also discussed that we did not expect to see a big impulsive wave structure build out of this, that this is more than likely a position that had been taken to apply pressure to the semiconductor space with the expectations that it would come up and form some sort of a peak like it has traditionally done. We did see that develop in success. It took longer than we expected, but in April, we did see the peak develop up to the 55-week exponential moving average. We see high levels of volume as Wall Street dumps this position. We see the short pressure that had been placed onto the semiconductor space start to back off here. And we see a structure forming that is very familiar to success. Historically, we see these long-term bearish divergence develop. We see the same sort of a flat structure here, and we expect to see a similar breakdown where the moving averages roll over and continue down, and price then breaks underneath them and goes back and back tests against that. So we expect to see that develop here in success. But the point is there was tremendous downward pressure being placed on the semiconductor industry and space. We saw it. We did see the spike develop in the short side. We got that and the follow through to the downside. This week we talked about how valuable using these leveraged ETFs, the short and long side together, the valuable insights you can pull out of doing that. for the sectors that they cover. And this is the long side. So this is the chart that coincides with the downward pressure that had been placed on the semiconductor space. You can see late October and November is when we were it is when the downward pressure was peaking on the semiconductor space. You see it begin to break down. You see it recovering here. This is when our short position got stopped out right in here. But then you see it follow through to the downside. And so as SOX S was going up and creating its peak here, as SOX S goes up and creates its peak, SOX L, the long side of the trade, starts to break down. And so we see the massive volume coming in at the bottom here. We see the volume profile extending out here. This confirms that Wall Street was indeed reaccumulating their position. They took profits here. They put downward pressure on the semiconductor space. They got the level that they wanted. They got underneath market structure, and they've gone in and acquired their new position. So all of this pretty much validates and confirms everything that we had been discussing and that we were looking for coming out of the semiconductor space. We knew there was downward pressure. We knew there was reaccumulation happening. And so far, all of this evidence that we've gathered confirms that. But jump over to NVIDIA now. This is the monthly chart that we presented in our spotlight last week. A few things jump out of this chart, and we wanted to point it out for everyone. We get a lot of questions, a lot of confusion, and it's difficult determining distribution versus reaccumulation. It's intended to be difficult. Wall Street is aware that it's difficult, and so they take advantage of it. And so you'll hear us consistently tell everyone that volume is your key. Will tell you what Wall Street is doing. It's the only thing you can really trust in the markets. You certainly can't trust the media. You can't trust what the banks are telling you. The only thing you can really trust is volume. And when we look at the monthly view of NVIDIA, we see during these distributive periods and during distribution, you're going to see significant price drop here. So these were significant drops in price here. And you see price go down to the longer term moving averages. This is a monthly chart. So if price gets down to the 55 monthly exponential moving average, then you've seen a pretty significant drop here. And so what we also see during these distribution periods is these high levels of volume. Consistently over a multi-month period, you see these high levels of volume occurring because Wall Street is dumping supply onto the market. They're going short. They are selling to help put downward pressure and push price down. And so you see these massive periods of extended volume. If you look at the reaccumulation periods here, you see more of a flat structure and you see low periods of volume. And so if we look at today and we look at this last period we've gone through, we see a very flat structure. We do not see price breaking down. We do not see long periods of high volume. We see a very similar structure to previous reaccumulation periods. So you hear us mention a lot that monthly charts are great, longer term charts are great to get a feel for the overall trend and the health of the trend and how strong it is. These are the types of things that we're looking for when we look at the bigger picture and we look at we look for institutional behavior. So what we see is we see a lot of bottom wicks here. That means that Wall Street's not panicking. Wall Street is not selling their positions. They're taking advantage of the opportunity to reaccumulate them. So I'm going to jump over to a live chart here. This is a daily chart. We see a beautiful reaccumulation structure here with buying climax, automatic reaction, secondary test, sign of weakness, and upthrust after distribution, and then a period of markdown here. And so during reaccumulation, what you're looking for in the markdown period is losing the moving averages and then back testing against them. This was the time to go short. We were trying to go short back in here. We got taken out. This was when we should have been going short and then adding to our short position as price went up and was rejected off of the falling moving averages here. But we see a beautiful reaccumulation structure. We see volume where we want to see it. We see the low taking out liquidity underneath this low right here. We see the crossover here. Uh, we we mentioned in our spotlight, and I'm sure everybody noticed through across the FinTwit universe. If you didn't hear about the death cross over the past few weeks, and you just haven't been paying attention, but there was a big deal made about this 50 in our charts. We use the 55-week exponential moving average and the 200-week exponential moving average, and you can see that they crossed right at the low here. And all over the FinTwit universe and all of the talking heads, we're all talking about this death cross and how we're leading into this bear market, and this is just the leading edge of it, and we're in big trouble. And you can see that Wall Street bought this up. Wall Street said, "Thank you very much," as retail panicked out of their positions because they were told of a death cross in an upcoming bear market. Wall Street took advantage of that and gobbled it up. So we're seeing price begin to come out of this. We do believe this is our bottom. We do expect to see demand back tested at late stage reaccumulation, just like in late stage accumulation. As price begins moving up to the top of the range, it's going to hit periods of overhead supply. It's going to come up and back test demand as it retakes these moving averages, as they start to come up, and as price gets over these areas right here. A couple of key areas to watch. 123 to 118 is really critical for price to get up over this point right here. That means it will have retaken its moving averages. If it can convert that into support, then that should be the all clear sign that we're looking for a markup period here. Great spot to add or go long. We're going to be looking at that very closely. Second key level to watch is this 104 area right in here. So if it goes the opposite way and we see it break down and we start to see some of these lows get lost and we see a new lower low get set here, then we know that there's potentially a further test coming here and potentially getting down into this long inefficient candle right here. So those are the things that we're going to be watching. Just a couple of things to wrap up with. Wall Street is not, they're not running scared. They are not dumping their positions. They're building their positions. Once they complete this process, once they get their positions rebuilt, we do expect there to be a big move here. This is NVIDIA. This is the algorithmic messiah. We do expect NVIDIA to take back over its leadership position. And when Wall Street is ready to continue that market period, we do expect to see a very strong move come out of this. So this is structure. Don't confuse noise with structure. Always keep an eye on the numbers. Always keep an eye on the chart. This makes perfect sense that it would come down to this level and undercut this low. We do see volume stepping in where we want to see it. This confirms that what we have been looking for out of this sector going back to June and July of last year. So hope everybody got a lot out of last week's Clarity Spotlight on NVIDIA, and hope everybody got a lot out of this video. But thank you very much. Let us hear from you. If you got any questions, comments, let us know. Otherwise, hope everybody has a great day.